You have I'm going to put in your mouth. Sounds like a very pessimistic view of a deal. You think a deal is going to be had, but it's going to be a terrible one.
Well, you don't allow yourself enough time when you have 90 days to negotiate. So the president has certain priorities. Obviously, the trade deficit is one. Some headline numbers around soybeans and other commodities being two. You don't have enough time to negotiate structural reform. There's no team on earth that could get together and force the Chinese into structural reform in 90 days. So what you're left with is either walking away from the table or threatening again to walk away from the table, or you take what the Chinese will give you, which is some top-level changes, particularly on IP protection, but things that can be easily reversed if tensions go south. And I think that's where we're headed. You
think that we're headed towards a deal, but just a lousy one?
That's right. Yeah, I think so.
What's the chance there is no deal?
It's possible, but I think
what's the chance that President Trump effectively walks away and says, look, I got into this because I said I was going to get something. I'm not getting what I want. I'm taking my ball and I'm going home.
Well, it's possible because they're pushing back. What's likely to happen is they're going to push back the March 1st tariff raising. And so they want to get Xi and Trump together because the Chinese know that the only way they can guarantee a real deal is to be face-to-face.
And we have no meeting.
No meeting set up.
On the calendar for
no
that.
meeting. That's right. And so a lot of this is, can they get a memorandum of understanding in place this week, maybe with the framework of a deal, so that they could set up a Xi-Trump meeting, maybe at Mar-a-Lago, and get this thing done over the next month. But anytime there's time and anytime there's Trump, you obviously have an X factor. He could change his mind. That said, I think they want to move on. I think that Trump's head is get me the best deal possible. So it would take a lot to change this around, but of course it's possible.
But who is in the better bargaining position right now? And I ask because there's been a lot of reports out of China about just how slow their economy is. So you have to assume. I'm assuming that we should be in a better place to make a deal.
We are. And I think that the published reports of Chinese weakness are nowhere near what we're seeing in China Beige Book data. We are seeing much more substantial weakness across the Chinese economy. Now, they have a little bit of a blind area here because January and February is Lunar New Year, and so you don't get good data out of those 2 months. But the Chinese economy is weaker. The Chinese are more pushed to have a deal. They're in a bad state. But at the same time, if President Trump doesn't want to hold them to the fire the whole year and cause pain, then he's sort of rushing into this too. We have more leverage, but we're still headed to a quick deal anyways.
How much deeper is the pain? Because you hear 6.6% growth, and that doesn't sound all that terrible.
Well, we don't put that much into the GDP number because GDP can be
manipulated.
It can be well, not just manipulated, but also it's aggregate growth, not productive growth. So there's a lot of problems with it. That said, we think that GDP is probably closer to 2% in the fourth quarter than it is 6%. Yeah. So it's a lot weaker than they see it now. You're going to see more stimulus. You've already been seeing in the first half of 2019. But the economy is significantly weaker, and you don't get this idea from looking at a PMI and seeing a little dip below 50, and that's what people are missing right now.
What do you think is built into the U.S. equity markets right now? Meaning, do you think there's an expectation a deal gets done, but a good deal, or just anything?
Anything gets it off the table. So there's a real question to whether a U.S.-China trade deal is a sell signal, because a lot of this seems to be priced in. The economy is much weaker than people think, but there's some suspicion that this is out there. So there's a question to whether this is just all good news going forward, or whether once a deal is signed, yes, it takes trade off the table probably for the rest of 2019 between U.S. and China, but you've got other things on the radar, and you've also got a weak Chinese economy. So big question.
Real quick, as you look at this week, and as we described it, there are going to be some low-level meetings earlier this week, and then Mnuchin and Lighthizer are going to be over there discussing this at a much higher level. What are the things that you should be listening for as an investor?
Lighthizer, I think, has realized the president wants a deal, and so his entire focus right now is enforcement. What they'd like to do is build into the deal something that made it look like a disarmament pact. So you had tariff snapbacks and auto sanctions for lack of compliance. But what the Hawks and the administration are trying to do right now, they're not trying to sabotage the deal. They're trying to document China's noncompliance, because nobody in the administration thinks that China is going to adhere to a deal for very long. And as a result, they'll have a record for why they gave China a chance, it didn't work, and they can snap the trade war on
Which
later.
means what for Wall Street? I mean, if this can snap back at any moment, you think that, okay, we've cleared this hurdle, but it might be back in 3 months, in 6 months, in a year's time?
I think they're going to take it off the table for all or most of 2019. I think it's going to be very difficult to build in legal provisions that actually do snap back the tariffs. I don't think that would help President Trump either. But I think what they're doing is when the political winds change, and that'll certainly happen in 2020, then you have the potential for Trump to say, I gave them a chance, now I'm going to bring back my tariffs, and things could get nasty again.